Greetings and welcome to the lesson. We are going to answer question 1. This is a question that is in two parts, A and B. Part A reads, CMP Limited is a production company that employs 50 workers. The company has the following payroll procedures. 1. The factory foreman interviews applicants, and on the basis of the interview, either hires or rejects them. When applicants are hired, they fill in an employee's withholding exemption certificate and forward it to the foreman. The foreman indicates the hourly rate of pay for the new employee in the W4 form and then forwards it to a payroll clerk as notice that the worker has been employed. The foreman verbally advises the payroll department of any adjustments to the hourly rate of pay. Number 2. A supply of black time cards is kept in a box near the entrance to the factory. Each worker takes a time card on Monday morning, fills in his name and notes in pencil their daily arrival and departure times. At the end of the week, the workers drop the time cards in a box near the factory door. Number 3. Each Monday morning, the completed time cards are taken from the box by a payroll clerk. One of the payroll clerks then records the payroll transactions using a computer system which captures all information for the payroll journal as calculated by the clerk and automatically updates the employees' earnings records and general ledger. Employees are automatically removed from the payroll when they fail to return in a time card. 4. The payroll checks are manually signed by the chief accountant and given to the foreman. The foreman distributes the checks to the employees and arranges for the delivery of the checks to those who are absent. The payroll bank account is reconciled by the chief accountant, who also prepares the various payroll tax reports. Required. Discuss 6 deficiencies in CMP Limited's internal controls with the associated risks for each deficiency. So that is the question. There are 4 procedures. We are required to discuss 6 deficiencies in CMP Limited's internal controls with the associated risk for each deficiency. Can I hear from you, members? There is lack of segregation of duties. That is true. This question was borrowed from August. This is August 2023. August 2023. Question 1. A. Deficiencies and associated risks. So you can see the question is allocated 12 marks. So candidates were required to give deficiencies and risks. So Roman 1, you have to give first of all one deficiency, then you give the associated risk to earn 2 marks per point. So like in point 1, you should indicate the deficiency. Like Sue here says, lack of segregation of duties. That is a weakness or deficiency. So what is the associated risk of lack of segregation? This is segregation of duties. Because you've seen the foreman candidates here. The factory foreman interviews applicants on the basis of the interview, either hires or rejects them. When applicants are hired, they fill in an employees withholding exemption certificate W4 form and then forwards it to the foreman. So you see the foreman is interviewing. When they fill in the form, they submit the form to the foreman. And you can see the foreman again indicates the hourly rate of pay for the new employees. He's hiring them. They are giving him the forms. He's determining the hourly pay. Do you see that? Then the foreman again verbally advises the payroll department of any adjustments to the hourly rate of pay. So the foreman has too much control over the hiring process, including approving hourly hours and distributing the checks. You saw in note number 4, the payroll checks are manually signed by the chief accountant and given to the foreman. So that is a weakness. There is lack of segregation of duties. But what is the risk that is associated with lack of segregation of duties in the case of CMP Limited? Too much control over these activities, candidates, increases the risk of unauthorized hiring. The foreman can decide to hire employees without any authorization from the company. Do you see that? There could also be risk of errors in hourly hours or pay rates. There could be risk of errors because you see, is only one person doing many tasks. When you have segregation of duties, a worker can check the work of another one and identify any errors. There is a risk of potential theft of payroll fraud. So there are many risks associated with the lack of segregation of duties in relation to this company. Candidates are just to give a deficiency and the risk to earn the 2 marks. Now give me the second deficiency. There are many risks, and deficiencies, candidates. If you are to read, almost every sentence is a deficiency here. In note number 2, we read that a supply of blank time cards is kept in a box near the entrance to the factory. Each worker takes a time card on Monday morning, fills in his name and notes in pencil their daily arrival and departure. That is a deficiency. There is weak control over timekeeping. Weak control over timekeeping, because the workers are self-recording their time, which can lead to inaccuracies and potential fraud. If you tell workers to just fill in the time they came in without any controls, then you can be sure there will be inaccuracies. Weak control over timekeeping. That is a deficiency. Employees self-record their time. Employees self-record their time. That is a weakness. And we see they are even recording in pencil. That tells you that the pencil tells you that it's very easy to tamper with the record. You can rub off what has been written in pencil very easily. You see that? That is a weakness. Weak control over timekeeping. Deficiency is that employees self-record their time, which can lead to inaccuracies and potential fraud. Risk. What is the risk of weak control over timekeeping? What is the risk of employees self-recording their time? Here, candidates, there is a risk of errors in calculating errors. Risk calculating hours. Risk of errors in calculating work hours. There's that risk that there will be errors because employees are recording their time without any control, without any check. No one is counter checking, because ideally you would have someone else recording their time if there is no automated system where employees can check in and their data is captured electronically. You see that? Which could lead to incorrect pay. Which could lead to incorrect pay. Because payment is made on the basis of hours. So if the hours are inaccurate, then the pay will also be incorrect. That is the risk. Which could also lead to overpayments. Okay, let me write that. And potential overpayments. That is the second deficiency and associated risk. We are identifying candidates' risks. Discuss 6 deficiencies. Have you come across any other? Incomplete or lack of documentation. I'm summarizing from what she has said. Incomplete documentation. That is a deficiency. So what is the risk of incomplete documentation? Risk of increase. And make sure you write candidates' risk so that it's clear. Because the question is deficiencies and associated risks. So when you are giving a deficiency, then you need to indicate that below is the risk. So you have to show the deficiency and the risk. The deficiency and the risk. The deficiency and the risk. What is the risk of having incomplete documentation? There is increased risk in errors. Increased risk of errors. Just as she says that the risk here is just errors and unauthorized changes, or even deliberate manipulation of pay rates. There is that risk of deliberate manipulation of pay rates. That's another risk. Deliberate manipulation of pay rates. Because there is no proper documentation, An employee can say, this is what I had, but in the back of the motive is to deliberately manipulate the pay rate, because there is that deficiency of incomplete documentation and even authorization. So Sue, before Sue, I can see here it says risk, insufficient and inappropriate evidence about the adjustment. So then says possibility of ghost workers, misutilization of funds to pay workers. Is that a risk, Sue, or is it a deficiency? When you say possibility of ghost workers, we are on the fourth deficiency. So possibility of ghost workers, is that a weakness, or is it the effect of a weakness? Because it sounds like a risk. When you say misutilization of funds, that is a risk. I don't think it is a deficiency. It looks like an effect. Now, currently, when we are talking of internal control system, always remember the control on review. You see, the work of these employees is not reviewed. No one reviews the work of another. There is no approval of even the payroll. So when you are given a question like this one, there are those controls that you all know, which should be in your mind. So you should be referring to what is in your mind with what is happening in a company like this one. You can see we have here a production company that employs 50 workers. So we're given the payroll procedures. We all know the controls that are required to be in place over any payroll. So one of the controls should be in relation to review and approval of the payroll. Does that happen in this company? No. So that is a weakness. Inadequate review and approval. There is inadequate review and approval of the payroll. Nowhere do we read that there is an employee who approves. We read in note number 4 that the payroll checks are manually signed by the chief accountant and given back to the foreman. Then the foreman distributes the checks. There is no where we read that these procedures are reviewed by any other officer of the company. There is no independent review and approval of the payroll. There is no independent review of the calculations. There is no independent review of the journal entries. So what is the risk that is associated with inadequate review and approval of the payroll? And to answer that question, you can first ask yourself a question: why do we monitor? We monitor, we review so that we can identify if there are errors, if there is any fraud, if there is any unauthorized payments. So the reason why this company needs another officer to review the work of the foreman and the accountant is to identify errors or fraud or even unauthorized payments. So the risk here is a risk of errors, fraud, and unauthorized payments. Errors, fraud, and authorized payments. There's the risk of errors. If there is no review, there is no monitoring. If there is no independent review, then there is increased risk of errors, fraud, and unauthorized payments. It's that simple. That is number 4. Give me number 5. The fourth weakness. We read in the last part of this question that the payroll checks are manually signed by the chief accountant and given to the foreman. The foreman distributes the checks to the employees. The foreman distributes the payroll checks to the employees, including arranging delivery to absent employees. That is a deficiency. The foreman does what? Is responsible for distributing payroll checks. Foreman is responsible for distributing payroll checks. What is the risk associated with that deficiency? He even arranges for delivery to absent employees. What is the risk? Don't you see candidates that can allow the foreman to withhold or misappropriate checks, which may lead to disputes with the employees? The risk is misappropriation of checks by the foreman. There's that risk, misappropriation of checks, because he is handling the checks, he is distributing the checks, he is even withholding checks for employees who are absent. The foreman distributes the checks to the employees and arranges for the delivery of the checks to those who are absent. That increases the risk of misappropriating the checks, potentially leading to disputes with employees or even payroll fraud. There is the risk of payroll fraud. That is the deficiency and risk number 5. You understand, candidates? Now you notice from what we've read, candidates, there is no mention of strong access controls for the payroll system, because here we are given information. The company has the following payroll procedures: a strong internal control system over the payroll must have strong access controls for the payroll system, such as passwords, protection, user restrictions, and so on. It's not part of these procedures. The company has the following payroll procedures. There is no mention of strong access controls. Lack of strong access controls, and these are controls to the payroll system. What is the potential risk associated with this lack of access controls? The risk is simple, candidates. unauthorized access to the payroll data. Unauthorized access to the payroll data. Because there is no mention of strong access controls, then there is a risk of unauthorized access to the payroll data, and even potential manipulation. And potential manipulation. Anyone can manipulate the payroll data. Is that risk because there are no strong access controls. That's it. These are 6 deficiencies and 6 risks. So let's move on to the part B of the question. You are the auditor of Flowermint Limited, a company engaged in growing and exporting flowers. Assume that when you arrived at your client's office on 11th January 2023 to begin the audit for the year ended 31st December 2022, you discover that the client had been drawing checks as creditors' invoices became due, but not necessarily mailing them. Drawing checks as the invoices became due, but not necessarily mailing them. That means that the checks are written by the company in favor of creditors, but they are not mailed to the creditors. Because of working capital shortage, some checks may have been held for 2 or 3 weeks because of working capital shortage. So the company didn't have enough working capital. So instead of paying the creditors money, they withheld that money so that they can meet their short-term needs for 2 or 3 weeks. Please understand that as we move on. The second paragraph is that the client informs you that mail checks amounting to 27.6 million were on hand as at 31st December 2022. He says that these December 2022 dated checks had been entered in the cash disbursements book and charged to the respective creditors' accounts in December because the checks were pre-numbered. Heavy sales collections permitted him to mail to the checks before your arrival. The client wishes to adjust the cash balance and accounts payable as at 1st December 2022 by 27.6 million because the cash account had a credit balance. The client is also reluctant to reflect an overdraft in the financial statements. This always happens, candidates, in practice. Is it not so? Required. Roman 1. Prepare a detailed audit program indicating the procedures you would use to satisfy yourself of the accuracy of the cash at bank balances on the client's financial statements. Roman 2. Discuss the propriety or otherwise of reversing the indicated amount of outstanding checks as at 31st December 2022. So you can see, with a question like this one, you have to read very fast and answer the questions, because you see they are just 5 marks and 3 marks. So let's look at it again. You are the auditor of Flowermint Limited, a company engaged in growing and exporting flowers. Assume that when you arrived at your client's office on 11th January 2023. So you arrived, the auditor arrived Let's analyze the question. Arrival of auditor. We are given the date. Assume that when you arrive at your client's office, you are the auditor. This is 11th January 2023. To begin the audit for the year ended 31st December 2020. So, year end is December 2022. So you arrived in 2023 January to audit the December 2023 records. And you discover that the client had been drawing checks as the creditor's invoices became due, but not necessarily mailing them. So the records show that the auditors have been paid, but in reality they have not been paid. On paper they are paid, but they have not received the money. So the company has a working capital shortage. And what does the client tell you as an auditor? The client informs you that unmailed checks amounting to 27.6 million were on hand as at 31st December 2022. So at this date, the end of this accounting period, we have 27.6 million shillings worth of checks. So the checks have been drawn. They are still within the company, but the creditors' accounts have been debited. They were on hand. So he says that these December 2022 dated checks had been entered in the cash disbursement book and charged to the respective creditors. So the creditors were paid. The creditors were paid. The creditors were paid. Balance, then pay, you debit. That means that the balance sheet does not have these creditors. Is that not the effect? Had been entered in the cash disbursement because the checks were pre-numbered. Heavy sales collections permitted him to mail the checks before your arrival. Do you see that? So before you arrived here, you can see the date is 11th, just before 11th. In 2023, it tells you that the checks were disbursed. Do you see that? Then in the third paragraph, we read that the client needs to adjust the cash balance and payable and accounts payable as at 31st December 2022 by 27.6 million because the cash account had a credit balance. The credit account had the cash account had a credit balance. That is abnormal. It is abnormal because in practice there is no way you can have a credit balance on the cash account. The client is also reluctant to reflect an overdraft in the financial statements. Have you understood the problem? Members, have you understood the problem? First of all, understand the problem. Where is Hilary Sue? Isha, have you understood the problem? Have you understood the problem? Say how to understand the problem. Aisha says yes. We always say a problem well defined is a problem half solved. So prepare a detailed audit program, and these are just 5 marks. Indicate the audit procedures you would use to satisfy yourself of the accuracy of the cash at bank balance audit program. These are just procedures, audit procedures. audit program to satisfy yourself. Now, to satisfy ourselves or yourself of the cash and bank balance, the auditor ought to perform certain procedures. One is confirmation of bank balances. Confirmation of bank balances. You have to do a confirmation of bank balances. You have to obtain bank confirmation letters directly from the client's banks, then verify the accuracy of the bank reconciliation at the end year, because the company is required to have done a bank reconciliation at the end of the year. So you need to check if the company reconciled the cash at bank balance with the cash within the business, because the bank statement shows the transactions that were carried out at the bank. The cash book also has a bank column. So the auditor has to obtain, first of all, confirmation letter directly from the bank. They will use that confirmation letter to verify, to do a verification, to verify the accuracy of the bank reconciliation as at the end of the year. The auditor, in other words, or furthermore, has to reconcile the bank statements to the general ledger. That is a procedure. So because here, candidates, we are talking about bank balances. You can only assure yourself, you can only satisfy yourself of the accuracy of the amounts shown in the books of this company by seeking confirmation directly from third party. The bank here is a third party. The second procedure is to review the bank reconciliations. The company must have bank reconciliation. So the auditor should verify the accuracy of the outstanding checks, because when you do a reconciliation, you can know the outstanding checks, the unpaid checks. Okay, what is the amount of the outstanding checks that they inspect a sample of the checks that have not been honored or the ones that have been cancelled, to ensure proper authorization and endorsements. In carrying out or reviewing the bank reconciliation, the auditor may also review bank charges and interest income for accuracy and appropriateness. 3. Examination of cash transactions. That is a procedure that can be done by the auditor to examine cash transactions. The auditor can test a sample of cash receipts and disbursements for proper authorization, recording and posting to the general ledger, then verify the cutoff of cash transactions at the year end. You understand? Examination of the cash transactions may also involve reviewing bank transfers and electronic fund transfers for accuracy and completeness. Review bank accounts. The auditor may also just choose to review the company's bank accounts. identify all bank accounts. Alright, first of all, you identify all the bank accounts maintained by the client. Then ensure that all bank accounts are properly reconciled. All bank accounts, in reviewing the accounts, should be reconciled. The auditor has to confirm that all the bank accounts have been reconciled. Evaluate internal controls is yet another audit procedure or program. Evaluate internal controls. Assess the adequacy of internal controls over cash receipts and disbursements. And then evaluate the segregation of duties and access controls for cash transactions. The auditor may also review the procedures for reconciling bank accounts and resolving discrepancies. Consider unused transactions. The auditor should consider unusual transactions by investigating any unusual or large transactions, such as large withdrawals or large deposits. You understand? So there are many audit programs. Candidates were just to give 5. Perform analytical procedure. Compare the current cash what with the prior periods. That is a good point. Perform analytical procedures and then compare the current cash and bank balance with prior periods. Any other point? Any other point? There is the cutoff procedures also. The auditor can also assess cutoff procedures. And just to support what Aisha has said, the auditor can confirm that checks dated in December 2022 were recorded in the correct accounting period. That is what we are referring to as cutoff. All right. Assess cut-off procedures. The checks for December 2022 should be related to December 2022. They should not be recorded in January 2023. Assess cut-off procedures. Then verify that subsequent payments to creditors are not double recorded in January 2023. Verify that subsequent payments to editors are not double recorded in January 2023. So if you are carrying out procedures, anything related to bank or to bank, then don't forget confirmation with the bank. Don't forget bank reconciliation, because these are controls. Now that is Roman 1. Roman 2, discuss the propriety or otherwise of reversing the indicated amount of outstanding checks as at 31st December 2022. That's what we read in the third paragraph. The client wishes to adjust the cash balance and accounts payable as at 31st December 2022 by 27.6 million. The client, let me read, informs you that unmailed checks amounting to 7.6 million were on hand as 31st December 2022. They were unpaid 31st December 2022. He said that this December 2022 dated checks had been entered in the cash disbursements book and charged to the respective creditors in December because the checks were pre-numbered. You see that? When you go back a bit, we read that you discovered that the client had been drawing checks as the creditors' invoices became due, but not necessarily mailing them. So the checks had been drawn, but they had not been mailed. That means that the cash at bank ought to have reduced by 27.6 million, but it has not reduced because that money has not been withdrawn by the creditors. So the company would wish to reverse that. So you are to advise on the propriety or otherwise of reversing the indicated amount of outstanding checks as at 31st December 2022. What do you think? It's not appropriate. You've said reversing the checks is not appropriate. Can you give us the justification? So reversing the checks would misstate the financial position. The reason is reversing the checks would give a misleading, okay? It will be misleading, will misstate the financial position. Let me use the word misstate. Would misstate the financial position of the company. It would understate accounts payable. It would understate accounts payable and overstate the cash balance. That also violates accounting principles. It violates accounting principles. How does it violate accounting principles? It would not accurately reflect the economic substance of the transactions. The economic substance of the transaction will not be stated. And that would potentially mislead users. That would mislead users of the financial statements. Reversing the checks would mislead users of the financial statements. It would provide a misleading picture of the company's financial health. So that is how you earn the 3 marks. Now, if you are to be asked the right approach, what would be the right approach? What should the company do? Disclose candidates. The company should just disclose. What should be disclosed here? Disclose the outstanding checks. The company should disclose the accounting checks. It should disclose the existence of the outstanding checks in the notes to the financial statements. Or even just classify the checks as current liability. They should be classified as current liability. The checks should be classified as accounts payable or just current liability. Then follow up to ensure that the checks have been cleared by the bank or the checks were issued before the auditor arrived. You see that? So that's it for this question. Any question? Do you have any question? So thank you for attending the lesson. Hope to meet you in our next session. Bye bye.